Good afternoon. It is April 17th. The market has closed and the market will not open tomorrow. We will have a 3-day weekend for the stock market and we'll be back in action on Monday. And it is to celebrate tomorrow's Good Friday. If you're a Christian, you know what that means. And this Sunday is Easter. So if you celebrate Easter, I hope you have a terrific weekend. If you don't celebrate Easter, I hope you have a terrific weekend. It applies to both categories of people, I guess. So taking a look at the market, we've got a market that sold off quite a bit on the Dow. The S&P held its own, up just slightly a little bit. And look at that Russell. It did well today. Wonder how the Russell is doing year to date. It is down quite a bit. It's really sold off, but certain stocks within that small caps sector, or I guess category, are doing really well. I think small caps are a great place to pick up really good businesses that are really going to go up in price quickly, because small caps can do that. They're not carrying the burden of a big, massive cap that they have to pull up along with its massive market cap. So Russell is doing fairly good for the last couple of days. Good to see that. Looks like we've got some people on the stream. Thanks for joining. Al Abdel, thanks for joining. All right, so that is the Russell has done okay over the last 5 days. And I know, picking out a few of the small caps in my portfolio, they've done quite well. I'll name a couple as we go through the live stream today. So that's what's going on in the indexes. Looking at Asia, the Shanghai was up a little bit. Nikkei was up a lot. So that's interesting. In Europe, in Germany, their stocks were down a little bit. In UK, they were pretty flat. And then in France, they were down a bit. All right. Crypto is really holding up well. The Bitcoin being around 85,000, it seems like it's really staying around that $85,000 number. So that is interesting to see that crypto, I think in general, is considered a higher risk asset. But nowadays, when stocks are really crumbling, Bitcoin's standing up pretty tall. So interesting to see Bitcoin's holding its own. Interest rates did go up a little bit today, but the previous days, interest rates were dropping. So interesting to see. I think the reason why interest rates went up a little bit today is the Federal Reserve looked at the employment data that came in and the jobless claims. We don't have an employment problem. I think the risk of having high unemployment isn't here yet. It actually was lower than expected. The forecast that was that jobless claims were going to be at 223,000. They came in at 220,000. So that doesn't compel the Federal Reserve to reduce rates. It's like, hey, we got people are employed. They don't have to start pulling levers that are going to accelerate the economy. So that looked good from an economy perspective. And the interest rates went up because the expectation is rates aren't going to move, or the Fed isn't going to try to move rates anytime soon. So interesting to see that. Building permits were a little lower than expected, and that's because weeks ago, interest rates did go up. So that's what happened from an economic perspective. Looking at the heat map, NVIDIA's had a rough couple of days. Yesterday it was down big. Today it's down almost 3%. And Broadcom is following it. But yesterday, geez, the semiconductor space, this was red hot. It just melted down yesterday. Today it's been a story of two sides, I guess. Technology didn't do all that great. You see that Google is down, Microsoft, Amazon, Tesla, NVIDIA is down big, Broadcom is down. But Eli Lilly announced that the weight loss drug that is an injectable now, they had a breakthrough where they can have people take a pill and it has a similar benefit to people that deal with weight problems and diabetes. So that breakthrough really rallied the stock. So congratulations to the Eli Lilly team for that advancement in their sciences. And congratulations to stockholders who own Eli Lilly. It's certainly a winner. That created a little enthusiasm. It drove up Johnson & Johnson, AbbVie, Merck. Amgen didn't, participate in the party, but Pfizer caught a little bit of a rally. Interesting. Now, within the healthcare space, we had the biggest healthcare payer is United Healthcare, big cap around $400 billion, and they got shellacked today, down 22.38%, because the cost of Medicare-based policyholders with them is much higher, so their profitability is going to be lower. They grew nicely. The revenue was good. Other factors look good, but the whole cost was too high, and the space really got sold off. United Healthcare got sold off big, but it also caused Elevance to go down 2.42. CVS went down 1.85. The only one that kind of made it through without any loss was Cigna. So there was some red there in healthcare. Some pretty brilliant green was in consumer staples. They had a very good day. Energy had a good day. Exxon went up nicely. So did Chevron and a couple of others. Energy did well. Real estate did well. Materials did okay. Utilities did well. So there was some sectors and industries that made it through the day quite well. And those spaces continue to accumulate gains, while some industries like technology continue to accumulate losses. So it's interesting to see how the tables have turned from last year and 2023 to 2025. The winners are quite different. Year to date, materials is leading all sectors. So stocks in the materials industries and the sector are up 8.48%. Staples are up 7.6%, and then utilities up 5%. So these are the sectors where investors are making money in the green, positive for 2025. And from there, some sectors that are just barely losing, financials and healthcare. And then, of course, the sectors that are losing the most are technology and discretionary. So it's a tough game to be in tech or consumer discretionary in 2025. The big cap stocks have been real winners for 2023 and 2024, but 2025, not so much. Apple's down 21%. It had an okay day today. Microsoft was down, and it is down for the year to date. NVIDIA is having just a tough year. Google's having a tough year. Amazon, tough year. Meta's having a tough year. Berkshire is not a tech company, but they're doing well. Broadcom, tough year. Tesla's having a horrible year. And we come down here, we start seeing some green across the board, and that's Eli Lilly, healthcare. Walmart, which is consumer, I think it's a consumer staple. TSM barely stayed in the green today, but overall year to date, it's having a tough year. Visa having an okay year, holding its value. So the top most valuable companies are having a very tough year, and that's expected because they'd gone up so much over the last couple of years. They got to give up some of those gains. So today we had some big earnings. I went over United Healthcare in a video. TSM had, I thought, decent earnings. I thought it was good earnings. It looked good. And then after hours, Netflix. I wanted to dive deep into Netflix. I wanted to review American Express. And I wanted to look at Ally, which also announced. There's a lot of action. I can't go over all of them, or we'll have like a 24-hour live stream. So instead, I'll just go over a couple. And we'll take a look. We'll take a closer look at those stocks. All right, so I'm going to get into some stocks. I'm going to start with Netflix. And just a quick reminder, if you're a paid member, and you want me to look at a stock, just put it in the chat. Happy to deep dive into that particular stock. If you're not a member, don't want to become a member, you can pay by the drink, and you can pay $5 for a super chat, and I can review a stock that you would like me to review. Be happy to do so. Just put that in the chat. All right, so let's take a look at Netflix. Netflix announced, and they announced after the market closed, and their stock's up 2.77. So investors like what they saw. Netflix is being treated kind of like a staple, where nobody's going to cut their Netflix subscription during a potential recession. And they may be right. I think most people would probably keep it because it is affordable. It is a market cap of $416 billion. Revenue of $39 billion, and it has a really high PE. A PE of 49 is pretty expensive. They're not a high growth company. They are a growth company. They're growing at like 15%. And that PE looks a little too high. Analysts think it's fairly priced, just with a 5% discount. Year to date, this one's doing well, up 9%. Over the 1 year, it's doing great, 57%. And the 5 year shows that there was a big opportunity in buying Netflix around this time period. I did so. I bought Netflix. I held it, and then I sold it at a big gain. And I also bought it for one of my sons. I manage his portfolio, and Netflix is one of the positions in his portfolio. So it was a big opportunity back here, but I think that ship sailed, and I will look at a full valuation of Netflix in this particular segment here. So the company's doing well. They're growing nicely. If you look at, this is for the full year of 2024, they're growing at 15.65%. That's very good growth, very good revenue growth. They are fairly big now, and they produce free cash flow. Very good. Analysts, they base their valuations on earnings per share, but some analysts think that it's priced a little too high, and some analysts think it's going to continue to go up higher. So on average, they think the stock is only 5% discounted, which isn't much of a discount. The earnings per share look really good. Looks like revenue is going to keep growing at about 11 to 10% per year. And they've gotten to a pretty big size. So really interesting there. Taking a look at where I value the stock, here is Netflix, and I've updated this with the earnings that were announced today. They grew nicely, around 15%, and their free cash flow did expand, which looks good. I updated the trailing 12 months of cash flow, and I'm going to grow that cash by 10% per year for the first 4 years, and then terminal value will grow at 4%. I'll discount all those cash flows that I expect in the future by 8%. And I get an intrinsic value of all those cash flows of $224 billion. The cash on the balance sheet is $8.3 billion, and the total debt is $14 billion. So when I add cash and take away debt, I get to an equity value of $218 billion. And the market cap of the stock is much higher than that. It's actually 48% higher. So the stock price on Netflix is 48% above its intrinsic value. So this stock is priced too high. And that's my opinion on Netflix. It's just priced above the intrinsic value. I sold Netflix when I was seeing that, hey, it's surpassing its intrinsic value. We're getting into a zone where it's not a valuation anymore. People are buying Netflix because it's easy to recognize company. Most people are already a Netflix subscriber. I'm a subscriber of Netflix. I've been a subscriber for a long time. I probably will be a subscriber for a long time as well. But it doesn't mean that it's a great investment. It just means I'm very familiar with it. But in this case here, people really are comfortable with Netflix, so it's selling at a premium, in my opinion. Overall, I don't like buying businesses where I'm paying too much of a premium. And I do think that Netflix, one of the weaknesses that I see in the business is they're kind of a one-trick pony. They do streaming. That's it. They create content. They also buy content and put it on their platform. Other businesses like Alphabet, they're a little more diversified. They have YouTube, but they also have their search business. They have their cloud business, and now they have an autonomous robo-taxi business in Waymo. So that type of diversification, I think, is good for a business. And Netflix doesn't have any of that. If they all of a sudden, let's say consumer preferences move to everybody just wants to watch YouTube videos and TikTok and not pay a subscription fee for Netflix or watch full length movies, then Netflix is going to be in trouble. And they only have one product category. So that is one of the weaknesses that I think exists within Netflix. But they've been very successful. So I hope they continue to be successful. That's my opinion on Netflix. I think it's a little too expensive, and I am a seller of Netflix, not a buyer. So congratulations to Netflix for having another good year, another good quarter. Mike, how are you? Yeah, I'm kind of there with you to some extent, right? Sometimes it's harder to figure out when to sell a stock than it is to buy a stock. Now, the way I played Netflix correctly was I did not own Netflix here. I did not own it here. I probably started buying here. I loaded up on Netflix during this range. And then I just rode the elevator up. And the elevator was a really fun ride. And then I cashed in my position. And I thought that at that level, Netflix was just getting priced too expensively. So I sold it. And it continued to go up. But I mean, a win's a win. It continued to go up. I probably left 40% on the table. And it's funny because I bought it for both my portfolio and I bought Netflix for my son's portfolio. He's not much of a stock investor, so I manage his fund. And I left it in his fund, and that one continued to go up. It's one of the best winners in his portfolio. So, hey, I knew when to buy it, and I sold it. I left some money on the table. Oh, well, at least I made a good gain on it. And you own Netflix through some ETFs you own. Got it. Yeah. Shadow Guy owns it through a couple ETFs. Yep. And then Brandon, good to see you. Good to see you, Shadow Guy. Yeah. So you sold a large ETF on gold. Gold's been doing well. ETFs on gold are doing well. And yeah, it's hard to pick a position or pick a time to sell. I think we'd all love to have a stock that we own for like 20 years and it compounds and stuff. That's great. But we also have stocks that go up and down. For example, United Airlines. This one I probably sold incorrectly as well. Now, I kind of expected that United Airlines was underpriced, and they were producing a lot of profits, cash flows, and so forth. And the stock really began to take off. And I probably sold here. I bought it like, I'm going to say around here, and I loaded up on it. I sold about here, and I made a reasonable return, nothing to write home about. And the stock continued to climb up. Well, if I would have been a buy and hold, for a long time, this one here would have gone up and then crumbled down. And more recently caught a rally, but you see the point where that's why I sold United. I made a return. I thought it wasn't going to go up much higher. I was surprised that it took so long for it to start to work. And then it finally did. So it's always tricky, but as long as I'm investing in good companies and in general, they have a better rate of return than the market on an average, then I'm going to be all right. And having at least practicing good selling principles and discipline, I'm just going to keep getting better if I continue to execute based on discipline and fundamentals. So it's always tricky to know when to sell, but hopefully gold doesn't, or I should say, hopefully you made the right decision. So Cinematographers. How are you, man? Good to see you. All right, so let's keep rolling. And just a reminder, if you want me to look at a stock, please put it in the chat. Looks like we have several people out there. And Mike, you sold Uber. So you sold Uber today, huh? I'm not ready to sell Uber. I think Uber has a little more upside. It has been a stock that has these rallies and then it falls, rally, falls, and it has one of these rallies. For all we know, it's going to fall again. But there was good news on Uber that the partnership with Waymo in Austin is really working. Something like 20% of the Uber rides that are being hailed are on a Waymo self-driving car. So it proves that Uber should be the platform that a lot of these technology companies should go and partner with, because they can get their technology consumed a lot and they can make a money on it instead of trying to build it on their own, which is going to take a long time. So, but I can't argue with selling Uber, especially if you sold it on a gain. Buying Uber at the right time, I mean, you're sitting on a really nice gain, right? So hopefully that's the case for you, Mike. And thanks for sharing that. I have been selling stocks as well, just to create more cash. I've been selling some of my Airbnb. I've been selling some of my Bitcoin and some of my ETFs that are bond ETFs, and just creating more cash. And my little cash pile is getting bigger and bigger, which is good. I think I have a comfortable pile of cash now. I probably have at least a month, month and a half, 2 months of cash should I get into some heavy buying. I didn't buy much today. I think I bought one stock and that was it. But the buying wasn't all that great because the market was, for the stocks that I own, the market was up. So anyway, good to hear that you sold some stocks and took a gain. All right. So another company I wanted to look at was American Express, and it was down today. Okay. And this is a stock that Warren Buffett owns. It's up 15% for the 1 year. Year to date, it is down about 15%. The 5 year, it's done really well. Really nice rate of return. And American Express principally is that, a charge card where, you carry American Express. I know the American Express does have a pretty strong relationship with corporate clients, and a lot of corporations will issue out the American Express to their employees, who will then travel on that card, or pay their expenses on that card. The PE doesn't look too expensive. 17 is the PE. It's 16% discounted according to analysts. And if we look at their growth and so forth, the growth rate is high single digits. It's very good because they are a big outfit, right? $62 billion of revenue. That's pretty darn good. So looking at free cash flow, very high free cash flow, especially the last couple of years. And this one, in a way, looks better than Visa, because I think Visa doesn't have as much growth. This one does have a little bit of a drop in free cash flow. Went from 19 down to 17 down to 12. So that is a little bit of a concern. So you have $12 billion of cash. It is a single digit grower. So if you multiply times 15, you get to about 180 billion. So you're right there at the valuation. Wonder how they're doing with debt and cash. So yeah, they're pretty much fairly priced in my book. Fairly priced. Nothing exciting. It's just fairly priced. So, but Warren Buffett's a big owner of American Express, and he's held the stock for a long time. So that is American Express. I'm a little surprised it didn't move much, but there it is. Year to date, it's down. I guess, one of the things that's probably keeping the stock down is if we do have a recession, we're probably going to have a contraction in business spend as it relates to travel and corporate spend. So I think that's might be the reason why American Express is, investors are not that enthusiastic about that particular stock. Moving on to the next stock, which will be Ally. And Ally does consumer finance and really has a lot of their business in automotive. And that's where they started. They used to be part of GM. It was called GMAC, and it was the spinoff of their financing arm. The market cap of the company is 9.7 billion, revenue is 6.6 billion. The current year PE is really high, but the forward PE is really low, 7.5. Analysts think it's really discounted. Year to date, it's going down with everybody else. Over the 1 year, it's down 12%. And over the 5 year, it's done okay. For a while, it was doing great. When you had that boom in automotive and used car prices were going up really fast, so were the revenues for Ally because they do a lot of that financing. But ever since then, the stock hasn't done very much. So this one here is consumer finance. I think it's a decent little company, but you got to buy at the right times and have a discipline of selling once you've gotten the rate of return you were looking for. Now, currently, they're not growing a whole lot. It's been single digit contraction for 2024. And then if we include the most recent quarter that just closed, they grew about 5%, which isn't bad. Now we're expecting that car prices may go up, right? Because if we have tariffs, the price of a car is probably going to go up. So the amount of lending that's going to happen is probably going to go up as well. So I think Ally might be doing some bigger loans. The free cash flow of Ally has always been good, if I recall. Where is that cash flow line? They're not showing it on here. I think I'm tracking Ally. Let me take a look. So Ally, I think, is discounted. It's just one of those stocks that it's going to go down or up based on the confidence in the automotive industry. If the automotive industry, if there's like a lot of pessimism, then Ally's going to go down. If there's a lot of optimism on the automobile industry, it's going to go up. So they're just going to follow the automotive industry. But the fundamentals show that, hey, the business is worth more than where they're currently trading at. So buying it at the right time, and I don't know if it's the right time. I think we have some uncertainty in the economy. Will the automotive business be good for the next year? I don't know. It's hard to tell because I'm not sure which tariffs are going to stick, which ones are going to be around for a while, and how much of an impact are the tariffs going to be on the automotive business, and who's going to come out ahead. For sure, pure play domestic producers like Tesla would probably be a beneficiary of the tariffs. Obviously, the importers, pure play importers, are going to really feel it. But I think Ally, if they're looking at financing across the board, I'm not quite sure how that's going to sort itself out. We will see. All right, so that's Ally. They didn't have a good day. We'll see what happens next week. All right, so that's Ally. Looking at some super investors here. This thing updates, and it's still Guy Spears, number one in my little ranking. I'm only ranking 14 analysts that I've covered. Michael Burry is close behind. Carl Icahn is there. David Tepper, Howard Marks, and then Robert Vinall. S&P is down 10% year to date. So looks like Warren Buffett and Stan Druckenmiller are right around the S&P return. Some of my favorites, like Pat Dorsey, aren't doing so well. It's down 17%. So those are the super investors. All right, let me catch up on these comments here. Looks like there's some good comments on stocks owned. Very good. I don't think I've missed any requests to analyze a stock, but please, if I missed it, please post it again. All right, so where to go from here? The one stock that I don't know that if I covered it, but TSM announced today. The semiconductor space has really had a rough, I don't know, 3 months. And TSM has been there for those 3 months, right? From January 22nd to now, the stock's really given up a big chunk of their share price, going from 224 down to 150. And today they announced their earnings were very good. They had good revenue growth. A lot of things really were impressive, but the market didn't have enough to cause a rally, probably because Nvidia is selling off so poorly, and so is Broadcom. This one here is a big cap at 676 billion. Revenue is really high at 88 billion. So investors are paying about 8 times revenue for the company. And the PE ratio isn't too bad at 22. And then forward PE looks pretty good at 16. The company grew really well. Let's take a look at, it's not showing the most recent quarter. And they announced their earnings and everything's in the Taiwanese currency. They do a couple conversions on their financials, but maybe Stock Analysis hasn't updated it because it is a foreign stock. So it might take a little while. But I could say I read the earnings and it was good earnings. They had very good top line growth and profitability was there. Free cash flow was there. So those things were there. But I think the market is shying away from semiconductor because semiconductor got so expensive. It's risky. It's risky to buy in and then watch your investment go down. Just ask any investor that's bought into Nvidia in the last 9 months. It has not been a fun experience, or Broadcom over the last 6 months. It has not been a fun experience for those investors, I'm sure. This one here, this is in a foreign currency. So I'm going to go to statistics, and this one converts it over to US dollars. Their revenue is 88 billion. The balance sheet, they have a good amount of cash, almost 74 billion, and only 32 billion of debt. Looks good. Cash flow, big cash flow producer, 26.7 billion a year. Very good. That's why they're such a big market cap, is that free cash flow. Debt to EBITDA look good. And overall, just a solid business, but it is priced a little too high. I owned TSM for years and sold it at the beginning of 2022 and very happy with the return. I tripled my money. I'm good. And I got out. And ever since then, it's kind of been hard to understand this business. The run up of the data center, I think a lot of it was kind of built on stories, not fundamentals. And now we're beginning to see the correction. It's like, oh no, fundamentals were not there. So I think there's still some correcting to happen. I think Nvidia is still too high. Broadcom's still too high. And Taiwanese semiconductor is not going to rally until all of that, I think, all the air is out of the balloon. All the stocks that are in semiconductor have to correct, and they're probably going to overcorrect, and then there'll be good investments available. I like semiconductor stocks. I've made money on them, so I'm waiting for them to get discounted enough and then really dive in head first. Right now, I'm just buying a little bit. I bought a little bit of Qualcomm, a little bit of Lam Research. I'm buying into a tiny little semiconductor company, but not very much capital is deployed in semiconductor. I think it's still risky and expensive. And that is TSM. So tomorrow is Good Friday, so the market's closed. Not much happening, but when we come back next week, I think I missed a day there. Let's go back to Monday. On Monday, the 18th. Sorry, I've got. Okay, here we go. So on Monday, the 21st, we've got a lot of earnings. Not a lot of big names on Monday, just a lot of them. We've got a bank, Diageo, which is, I think these guys are like online platform company. And I don't recognize any big names here. Just a lot of mid caps, small caps. Tuesday, Tesla. Oh, that's going to be big. SAP, the big software company, General Electric, Verizon, Intuitive Surgical. I know Intuitive Surgical, Mike, you've asked me about that company. They've been selling off. We'll see what happens on Tuesday when they announce. RTX, the aerospace and defense company. Chubb, okay, that's one of my holdings, big insurance company. Lockheed, Elevance, health insurance, very similar to United Healthcare. We'll see what they announce. And Moody's, that's been a solid stock. 3M, that's one of my stocks. Looking forward to seeing what they say. Kimberly Clark, that's a staple. So there's a lot of companies next week. It's going to be hard to keep up. So that is going to be Super Tuesday. Wednesday, Philip Morris, IBM, AT&T, Thermo Fisher, ServiceNow, Boston Scientific, Boeing, CME Group, GE Verona, Lam Research, one of my holdings there. Chipotle is announcing on Wednesday. Newmont, a materials company. So we have a lot of companies announcing next week. The volume is going to be huge. Procter & Gamble, T-Mobile, Merck, this is Thursday, Pepsi, Union Pacific, Gilead Sciences, Comcast. It's just going to keep coming. It's a huge wave next week. Then Fridays are usually light. AbbVie, oh, well, stand corrected. AbbVie is a pretty big name. Unilever, which is a staple company. HCA Healthcare, Aon, Schlumberger. So it's going to be a big week. So tomorrow we don't trade, but then we're going to come back and it's going to get pretty furious. And I guess the week that follows, then we've got super giant companies. So in a week from Monday, we're going to have Alphabet, Caterpillar, Waste Management, MicroStrategy, which I think is going to be rebranded as Strategy. Hey, we'll see you, Mike. Happy Easter to you. Have a nice weekend. So that's Big Monday. And then we've got Tuesday, Amazon, Visa, Coca-Cola. That's going to be big. Pfizer, looking forward to that. Spotify. And then on Wednesday, Microsoft, Meta, Qualcomm. Huge. Man, next couple of weeks are going to be busy. Apple is going to announce on May 1st. Eli Lilly, they had a great day today. MasterCard, Amgen, Stryker, Mercado Libre. Looking forward to that. And then Friday, the oil companies. Exxon, Chevron, Shell, Cigna. Wow, man. It is going to be fun. It's going to be busy. And we'll see how stocks trade. Hopefully we see some positive news and the market begins to advance on fundamentals, not on just stories. We'll see. We'll see what happens. All right, good stuff. So just a reminder, if you want to get signed up, I see we've got 30 people on the stream. You can just go to my homepage and then just click the join button and you get signed up and become a member. Nice perks if you become a member. You can attend multiple investor calls that we have throughout the week, one on Tuesday morning, one on Wednesday evening, one on Sundays. We're not going to have the call on this Sunday because it's Easter Sunday, so I canceled it. We will reconvene the following Sunday. But then on live streams, if you want me to check out a stock, you put the symbol on the chat. I will do a deep dive on that stock and share with you my analysis on it. I'll also share the tools that I work with and put them in a shared drive. You can look at the intrinsic value. You can also look at each month, I'll publish all the valuations that I've performed, and you can control F and then go find a stock. Like we were looking at Netflix earlier. You can see that on this date, of course, I just updated it, but I haven't updated this form. You could see what my analysis was on Netflix. So that could be a resource, just one more data point as you're making your decisions on stocks. So take a look. It'd be great to have you guys, every single one that's on the live stream, be a member, and you can join the community. The community is expanding, and it's great to see. So that is what's going on. All right, guys. Well, I wanted to stream to kind of call it a week. Tomorrow, I am going to be with family, having some fun. So let me say goodbye, and I'll probably come back and stream maybe on Saturday, and for sure on Monday evening, I'll probably stream. So if you'd like to catch my stream, look for it maybe on Saturday and for sure on Monday evening. So everybody enjoy the weekend. Hopefully this week was a good one for you as it relates to stocks. And I appreciate you attending. Everybody, happy Easter. Take care. We'll see you guys.